3 months ago, I made a decision that many investors are scared to make. I stopped betting on North America only and went global. And almost immediately the market started shaking. Volatility, currency moves, tech swings. Since then, my portfolio is up over 6%, beating the S&P 500. But here is the uncomfortable part. The international ETFs themselves didn't outperform the US. So what actually worked and why? Let me show you.
Do tell.
Hi, Mike here. This channel is all about showing you what happens when a regular person invests consistently, week after week. No hype, no guessing, just long-term grind. And today we have big numbers, big portfolio change, and honestly, some surprising numbers. Let's go! For the first 12 months, my entire portfolio lived in North America. VFV, ZNQ, VDY. Those are solid funds, but the world is bigger than two economies. And the last 3 months showed exactly why diversification matters. I shifted strategy. Every week, $130 went into VIU and VEE on a course of dilute the existing ETFs and ultimately take 25% of the entire portfolio. And of course, the markets didn't stay calm. We had dips, we had spikes, currency swings, tech volatility, well, usual caps. And my ETFs weren't moving together. Some dipped harder, some barely reacted, some recovered faster. That's where the power of global diversification kicks in. But when I checked the charts, I couldn't believe which ETF outperformed them all. Wanna guess? Hit the pause button and drop a comment with your guess. Let's see how many of you guessed it right. This is how S&P 500 behaved the last 3 months. As you can see, there were periods of solid growth, then dip, then another growth, another dip, another growth, another dip, but at the end it showed some solid growth. Now let's see how VIU behaved. Okay, as you can see, the graphs move really close. Yeah, at the end VIU delivered slightly less, but not that dramatically. Let's see what VIE has to show us. Alright, here is the graph is more interesting. For the first 2 months out of these 3, they were really close, but at the end it dropped really hard. Now let's see how the ETFs that I've been holding the whole previous year behaved. Let's start with big tech, ZNQ. Bigger growth, even bigger, but at the end, by the results of these 3 months, it delivered approximately same results as S&P 500. See how it happens in the short term. Sometime in between, the growth is really strong. But then another half period and we're back to virtually the same level as S&P 500. And finally, our VDY. This ETF was supposed to leverage this aggressive growth that ZNQ might deliver and some aggressive downs that it might deliver as well. Can you see this? It delivered the best results out of all 5. If you watch my video where I was choosing these ETFs, VDY was chosen for its dividends and I did not expect any exceptional performance. But by the result of these 3 months, it outperformed them all, including the tech stocks.
Alright, the part everyone wants, results. So far, I've invested $8,200. My portfolio today approaching $9,600. That's a net gain of almost $1,400. Here is some fun math. It doesn't actually mean anything, but it's still fun. I've been investing for 15 months. That means that on average, my portfolio gain was about $90. That's pretty decent for a boring strategy of investing $130 a week into 5 ETFs without trying to time the market or do anything fancy, right? And yes, I checked again, I'm still outperforming S&P 500 by a huge margin. Just for fun stats, I checked separately the performance of the latest 3 months. The S&P 500 is up slightly over 3.5%, which is pretty good actually. It's about its historic average. My portfolio up more than 6%. So, a big question. Did going global actually make a difference? Well, not quite.
What?
To be honest, I did not expect them to, because my expectations for them are stretched years ahead. Here is the video where I put all the details. I'll also put the link in the description below so you can check it out later. The big tech? Yes, they had huge spikes on the way, but by the end of this 3 months period, they ended up just barely above the S&P 500.
Pity.
It was Canada that took the biggest leap. Can you see the real power of geographic diversification now? VDY grew most of them all, and that is not counting the dividends it pays. Speaking of dividends, VIU and VEE pay quarterly. The last payout was in late September, right when I had just started buying them. I literally received 92 cents from 4 shares of VIU. Since then, my position have grown significantly, and at the end of December, both VIU and VEE will pay again. I'm expecting my biggest dividend month so far. All these months, my position of VDY, the main dividend driver, did not grow at all. That's why the dividend graph looks a bit stale. But with additional payouts in late December, it will revive significantly. I'll break down all the numbers in my next video, so if you haven't subscribed yet, please do, and if you have, hit that bell button so you don't miss the new video.
Alright.
None of this happened because I timed the market or predicted anything. It only happened because I stayed consistent and kept investing in the same ETFs regardless of what the market was doing. Consistency beats emotion. Long term beats short term. If you've been following this journey for a while, you probably remember my biggest milestone so far, the end of my first year of investing. That video turned out to be the most popular video on my channel for a reason. Now, 15 months in, my portfolio is bigger, more diversified, and performed even better than I honestly expected. If you want to follow this journey month by month, real numbers, real results, you know what to do. This is real money, real investing for common people like you and me. And the journey continues. See you in the next one.